Today is the 13th of August, 2022. Let's start with our disclaimer. Look once again at the long-term count, go over our predictions from Thursday night, and then make some predictions for Monday. Next week I have personal business during the week and may not post every day. These are my rules. Please follow the rules of the channel. If you don't, I will block you and I won't warn you first. Please remember that it's a plan. Plans can change. Plans can be completely wrong, and anyone who wants to risk money on this does so on his own. Look for the pattern with the early low, which is this. And Monday's pattern, I believe, will also have the early low. Well, here's what we said. We had mixed, these are the patterns I'm looking for next week. Said the commonest thing was a gap and prompt move outside the day's range. Well, we gapped and we moved outside the day's range, but I can't call that prompt, so that didn't happen. It certainly didn't close till it changed, so I guess neither of those things happened. Now let's remind ourselves that because we didn't gap and move outside the day's range promptly, that we looked for lower prices printing fairly soon. Now, of course, that's the rule. Rules can always fail, but this one usually works. And by lower prices, I mean under Thursday's low. Doesn't mean I'm right, but that's what the rule says. Well, we had this powerhouse rally. You don't see these all that often. MEJT says the whole thing retraces. It gives us a target of 4252.24, most likely by Monday's close, and unless we gap up smartly. That's my call. Well, this was really a powerhouse advance. This is the 89-week moving average. Trading past it tends to separate bull markets from bear markets, but you need confirmation for any move, meaning we have to trade 1 cent past Friday's close. If we gap down Friday and never fill the gap, this break above the average does not count. Well, here's a major league trend line. It goes back to the pre-COVID high. You can see all these terrific hits. You can see we hit it right on the nose every time. And that trend line is resistance. And the rule is you gap over resistance or resistance wins. By winning, if we gap over this line, if we trade over this line without gapping over it, the move won't stick and you'll retrace at least to the line. But a high percentage of the time, that line's going to hold, and this marks the end of the move. It all goes away if we gap up, and we're not going to know that until Monday. Gapping up would also confirm the strong bull move that we saw. Remember, if we don't trade higher Monday, that the break above the 89-week moving average doesn't count. So we have a strong rally up to, but not through resistance. There's additional resistance from this trend line here. It doesn't have to hold. You could still gap over it, but if you don't gap over it, that's resistance. We still have 5 waves up. These things don't go on forever. It doesn't mean it has to stop here. We're going to have to see if there's some internal count which justifies this leg as possibly being over. Just because one count works doesn't mean some other counts won't. Now, I think this was a major low based on sentiment indicators which printed at the time. I doubt this is the end of wave black 3, but it's a candidate for the end of magenta 1 of black 3. At any rate, when you have a declining 200-day moving average, and you start this far under it, it's very difficult to trade significantly over that moving average. So that isn't too far away from where we stand now. It's 40, 50 points, 1% plus. And that doesn't mean you have to hit the moving average. So it's very difficult to start this far under the average and go over it, particularly when it's declining. So at some point in here, this should end. So let's take a look at this 1, 2, 3, 4, 5 waves and see if there is a count which justifies it ending or if we're obligated to go further. Well, I don't think this count is clear at all to me. But we had the 1, 2, 3 from before. You can count wave 4 here. You can then count on a smaller degree 1, 2, 3, 4, and 5. The fibs all work, and wave magenta 5 is exactly equal to wave magenta 1, which is a pattern Elioticians tend to like. Now, I've only got 3 waves here, but that doesn't mean it can't be the end of the wave, because if we gap down, which hasn't happened yet, you can get a truncated 5th wave. In fact, when the 3rd wave, which is what I'm calling this, 3rd wave of lesser degree, is this strong, you should anticipate having a truncated 5th wave. Doesn't mean it has to happen every time, but it's very, very common. So even though this isn't the clearest count to me, it I don't think breaks any rules. And if we do gap down, which certainly isn't assured, you can justify it. And if we do gap down, which hasn't happened yet, obviously, it would mean you came up to resistance and resistance held. If this is wave magenta 1 of black 3, magenta 2 can actually be pretty steep. And it wouldn't surprise me if that's what happens, if we play Fibonacci ping pong between the 50 and 200-day moving average. None of this has happened yet, and if we gap over this line, you can just wash that away. But if we gap down, it's trouble. Won't know that until Monday. Well, Monday's pattern has the early low. We could still gap up. Typically, it's a rally day with a final hour high. If it's weak instead, more weakness tends to follow before long. There is a lower target. Unless we gap up smartly, the rules call for it to print. It's quite bearish if there's no follow-through, and particularly bearish if we gap down smartly. Trendline resistance and the wall into the close make such a drop possible, though it's by no means assured. There's a wave count compatible with the rally leg having ended, but that's not the only count. Gapping up Monday will have overcome major resistance, although more resistance would be expected in the vicinity of the declining 200-day moving average. I don't like standing in front of moves like this, particularly on a Friday. You should really anticipate it following through, overcoming resistance, and continuing a high percentage of the time. But because it happens a high percentage of the time, because everything is aligned, it's particularly negative if that doesn't happen. We have the pattern with the early low. I still have a rule which says this low falls before long. Doesn't mean the rule's right, doesn't mean it works every time. But if we gap down smartly, you can think of this as the end of this leg. Hasn't happened yet, we'll see if it does, and that's today's call.